First, let's take a look at how the markets performed this week. First to European markets. European markets closed higher on Friday, building on gains from the previous session to notch their highest levels since April 2022. As at Friday, January the 13th, Euro Stoxx 600 closed on 452.54. It was up by 0.52%. In London, the FTSE closed at an all-share index of 7,844.07. It was up by 0.64%. The markets in Germany saw the DAX close at 15,086.52, also up by 0.19%, while the CAC 40 in Paris ended the week at 7,023.5, gaining at 0.69%. And finally, the IBEX 35 in Spain ended at 8,881.7, gaining by 0.61%. To the Nigerian markets now. At the end of the last weekday of trading on the Nigeria Stock Exchange, a total of 217.16 million shares in 4,591 deals, corresponding to a market value of 2.55 billion naira, were traded. The current market capitalization of the NSE is 28.6 trillion naira. And finally, a look at Wall Street as at Friday, January the 13th. Now for some top business stories that made headlines this week. First, Qatar has signed a $6 billion deal with Chevron Phillips Chemical to build a plant and the biggest ethane cracker in the Middle East, which will convert natural gas into polyethylene and other plastics. The JV, with a 70-30% equity share between Qatar Energy and CPC, known as the Ras Laffan Petrochemicals Complex, will come on stream in 2026. The plant will produce 2.1 million tons of ethylene a year and 1.7 million tons of polyethylene derivatives. Speaking on the investment, Saad Sherida Al-Kabi, Qatar Energy's minister and CEO of Qatar Energy, said that it not only marks an important moment in Qatar's downstream expansion, but it will also reinforce her integrated position as a major global player in the upstream, downstream and LNG sectors. This investment comes less than 2 months after both companies took the decision to execute an $8.5 billion Golden Triangle polymers plant on the U.S. Gulf Coast in Texas. The British government announced on Monday that it will be reducing energy subsidies for businesses, which has been described as unsustainably expensive, although present support will extend for another year from April at a cost of £5.5 billion. Finance Minister Jeremy Hunt said in a statement that his priority is to tackle the rising cost of living that families and businesses are struggling with, in the wake of efforts to stabilize the nation's public finances following the economic and political turmoil caused by recent leadership challenges. The government was due to publish its proposals for business energy support before the end of 2022, but the decision was delayed, angering some businesses who face uncertainty over their energy bills. With the new package, companies will receive discounts on their electricity and gas bills, and others classified as energy-intensive users will get more generous support. The government calls the new scheme a significant fiscal intervention amidst outcries it would not give sufficient protection to companies if energy prices spike again ahead of next winter. The President of France, Emmanuel Macron, has revived his economic reform drive by launching plans to overhaul the pension system in the face of strong trade union pressure. According to the Organization for Economic Cooperation and Development, France, with one of the lowest retirement ages in the industrialized world, also spends more than most other countries on pensions at nearly 14% of economic output. The reform details plans to raise retirement from 62 currently to 64 or 65 years. The reform's passage through Parliament may be far from easy, however, as Macron lacks a working majority. 3,200 jobs were cut this week in the biggest ever round of job cuts, according to Goldman Sachs. An insider reported that more than a third of those positions will likely come from its core trading and banking units. Under CEO David Solomon, the company's data shows that headcount leapt by 34% from the end of 2018, climbing to more than 49,000 as of September 30, 2022. The bank is trying to reduce its cost amid an uncertain outlook for the markets and the economy, a slump in asset prices and huge drops in profit. For those remaining at the firm, they can expect compensation figures to tumble, especially within investment banking. These cuts also come a week before the bank's traditional year-end compensation discussions, making it in stark contrast to last year when staffers got showered with big bonus increases and granted special payouts for a few of the high-ranking staff. Goldman is set to publish its fourth quarter results on January 17. Ghana's inflation rate hit a record 54.1% in December 2022 as a result of increased food prices, housing and transportation in the country. Compared to the previous month, the inflation rate was 50.3%, as stated by government statistician Samuel Kobina Anim in Accra. According to Bloomberg, the 54.1 inflation rate was the seventh highest in the world among 120 nations, including the Eurozone. Ghana's inflation rate has now surpassed the 10% ceiling of its central bank's target range since September 2021. Imported inflation was 61.9%, food prices rose 59.7%, and transport costs increased 71.4% with the new rate. Worsening conditions across economies have caused the World Bank to slash the global growth forecasts it made in mid-2022 from 3% to 1.7% for 2023, as said in its latest report, Global Economic Prospects. The adjustment was made due to a significant downgrade to its prospects for the U.S. economy, which it now forecasts at 0.5% growth from an earlier projection of 2.4%. China's outlook for 2023 was also cut from 5.2% to 4.3%, Japan from 1.3% to 1%, Europe and Central Asia from 1.5% to 0.01%, and Nigeria to 2.9%. 2020 forecasts have also been lowered from 3% to 2.7%. According to the banks, these estimates will be the third weakest pace of growth in nearly 3 decades, overshadowed only by the global recessions caused by the pandemic and the global financial crisis. The World Economic Forum, which hosts global elites consisting of politicians, business leaders, academics, investors, and economists, resumes its normal January time slot this year at Davos, Switzerland on Monday. The summit, which will hold from January 16 to 20, is themed Cooperation in a Fragmented World and will host panelists and keynote speakers including South African President Ramaphosa, former U.S. Secretary of State Henry Kissinger, WHO Director General Tedros Ghebreyesus, UN Secretary General Antonio Guterres, and the actor Idris Elba. Only one G7 leader, Germany's Olaf Scholz, will be present at this year's summit as he's due to give a special address. The absence of other world leaders is not surprising, though, and may well be in part due to the reputation risk of enjoying the high life in Davos while many nations are dealing with rising inflation, cost of living crises, the impact of the energy crisis, and food scarcity. The UK economy grew unexpectedly in November, assisted by a boost from the World Cup official figures show. A 0.1% expansion was due in part to demand for services in the tech sector in spite of households being squeezed by rising prices. The Office for National Statistics said pubs and restaurants also boosted growth as people went out to watch the football. Although the November figures of the country's GDP were much better than anticipated, it is still uncertain whether soaring costs of food and energy consumption will tip the UK into recession as people cut back. The November increase marks a slowdown from a 0.5% increase in October, which was largely a result of businesses bouncing back as they raced to mark Queen Elizabeth II's funeral in September. Argentina's annual inflation rate was at its highest in 3 decades, as a political crisis exacerbated price hikes driven by the government's lack of a credible economic plan. Consumer prices rose 94.8% in December from the same month a year earlier, according to government data published Thursday. Prices also rose 5.1% last month from November, accelerating after cooling in 3 of the past 4 months. Price hikes were led by tourism, alcoholic drinks, and housing costs. Although the central bank released a statement that the board would be keeping the benchmark interest rate unchanged at 75%. The rising annual inflation, expected to surpass 100% in the coming months, will have a major impact on Argentina's presidential election in October. Apple CEO Tim Cook will receive a pay cut in 2023 to $49 million in total compensation, the company said in a filing with the SEC. Cook requested the change, Apple said in the filing, following a shareholder vote on his pay package. The company also reduced the number of restricted stock units Cook would receive if he retires before 2026. In 2022, Cook made just under $83 million in stock awards, $12 million in incentives, and $3 million in salary. He also got benefits including retirement plan contributions, security personnel air travel, and over $46,000 in vacation cash outs. Apple's compensation committee said it made the change in response to last year's pay-on-pay vote in which 64% of shareholders approved of Cook's compensation, down from 95% that approved it for Apple's 2020 fiscal year. Apple's board praised Cook's performance and said it has confidence in the CEO's long-term strategic decisions. JP Morgan Chase, Bank of America Corporation, Citigroup, and Wells Fargo managed to beat Wall Street's reduced expectations for their fourth quarter profits as higher interest rates boosted income from loans. The banks turned in stronger than expected results despite a slowdown in overall deal activity, such as home mortgage loans and initial public offerings. Bank stocks moved into positive territory in midday trades after shaking off losses earlier in the session. With the earnings from the big banks, Wall Street is looking for clues on the health of the global economy and the effect of higher interest rates and inflation. Meanwhile, still in the US, inflation closed out 2022 in a modest retreat, with consumer prices in December posting their biggest monthly decline since early in the pandemic. That's according to the Labor Department. The Consumer Price Index, which measures the cost of a broad basket of goods and services, fell 0.1% for the month. That equated to the largest month-on-month decrease since April 2020, as much of the country was in lockdown to combat COVID. JP Morgan is suing a 30-year-old entrepreneur, Charlie Jarvis, for misleading them into buying her education startup for $175 million. Jarvis started the fintech company which offers software to improve the student loan application process for Americans seeking financial aid. According to the suit, JP Morgan Chase claims that Jarvis created 4 million fake users to increase the credibility of her fintech company when she sold it to the bank in 2021, and had connived with another executive at the company to pay a data scientist $18,000 to get it done. The bank claims that the data shared in their sale pitch suggested Frank had around 4 million customer accounts, while in reality, fewer than 300,000 of those were legitimate. The scheme unraveled when it tried to email those users, and 70% of its emails bounced back. In a statement to Forbes, Alex Spiro, Jarvis's lawyer, says JP Morgan is merely trying to cover its misconduct after the company rushed to acquire Frank and discovered they couldn't work around existing student privacy laws. And that's it for the Market Roundup and top business stories of the week.